you're watching India market close. It's been a rough day for the markets. A completely rough day, at least on the front line, and it's continued to show weakness. I would say maybe slight recovery from the worst levels of the day for the Nifty. Story really in the bank Nifty today, where you've seen a much better recovery. In fact, the same range as yesterday relatively, but the Nifty has had no respite. Let's just pull up the intraday for the Nifty and the Bank Nifty to give you a sense of what kind of a day it has been. A whole host of reasons, of course. Global cues largely. India is mirroring what you're seeing across the world right now. And, you continue to see that weakness all through the day. We're not too far from the day's lows also right now as we speak. Let's look at the Bank Nifty though, and what the day has looked like for the Bank Nifty on the back of some very specific stocks. So a bit of recovery here on the Bank Nifty, relatively speaking, than what we have seen on the day. HDFC Bank is one of the reasons, and you will see that picture when you pull up the heat map today. What has been hurting and what has been working. HDFC Bank, they're single-handedly really giving some spots of green and optimism in the market. Divi's, Dr. Reddy's, Sun Pharma, very, very defensive play. Sun Pharma, all right, had their numbers come out as well. Kotak Mahindra Bank to some extent. Nestle Britannia holding up. But the autos are the ones which have really hit a speed bump today. Eicher, Maruti, Tata Motors, M&M. Now, admittedly, this is one pack which ran up quite aggressively, and so maybe you are seeing a bit of a pullback. You have a variety of reasons. Sales numbers which came in for July were less, less exciting than what the street had perhaps expected. But you're seeing quite a hit in some of the IT names as well. Look at Wipro. Wipro down 3% is really hurting today. Metals is the other space. Hindalco, JSW Steel, Tata Steel, all of them hurting. Now, like I said, this is part of a bigger global picture. So I just want to pull up for you what European markets are doing right now, and we'll see how some of the Asian markets have closed. This has started from the weekly jobs numbers which came out in the US yesterday, showed the numbers very weaker or much weaker than what was anticipated. Fears of a recession have sparked off. The big story behind that is, did the Fed wait too long to even start talking about interest rate cuts? And has there been a pain point there? So you had that slide overnight in the US. You're seeing that continuing. I mean, the Nikkei was down 6% today. We'll just pull up Europe just for a sec to see if that story continues. And yes, it does. Across the board, you have red and, of course, India mirroring this as well. Let's just pull up the advanced decline ratio also very, very quickly to see, what is hurting. And there you have it. Quite a tough day. It's actually broader markets seem like they are improving right now. I don't know. Something seems off here. But yeah, it's been a rough day overall for the markets, definitely. In terms of sectoral indices, and we'll come to the broader markets as well. Hersh will come in with some of those names. But in terms of sectoral indices, if I pull up, it's a pain point around the way. Realty, definitely getting hit. Back of some numbers as well. Auto, metal, all of them seeing pain point. Metal, of course, part of the bigger story. If there is a slowdown, consumption or demand goes down as well, and metals get hit. But yeah, it's a tough afternoon, Hersh.
Absolutely. Even in the broader markets, especially where you're seeing pain points, especially in certain pockets. First off, me take it straight to results reaction. Ratan India Power, let's pull that one up. 3.5% higher. Look at the positives first before we go on to the negatives. PSP projects, very healthy pipeline continues to build with regard to orders coming through. Almost 3,500 crore worth of orders in this quarter. That stock is up 2.5% odd. But let's take a look at now the losers. Repco Homes to start off 6.5% lower. You have GR Infra 5% down. Tata Motors sulking in trade 4% lower. Nifty 50 counter. You have Triveni Engineering down nearly 4% as well. Somani Ceramics was a miss overall, 3% lower on that one. And you have Saregama and Paradip Phosphates, both of which are down 2% odd in trade today. Let's take it to some names, especially which are gaining on the back of news. Shakti Pumps, new order win. I think 12,500 odd pumps being ordered. Up 5%. That one's sitting on an upper circuit on a day like this. So that's one. KPI Green on the back of that buyback announcement, I believe 4.4% higher. You also have Morphan Labs, which is up nearly 4% as well. You have Alembic Pharma up 2.5%. TTK Prestige again on the back of a buyback. Morphan Labs is on the back of a QIP which they are doing. TTK Prestige on the back of a buyback, Symphony on the back of a buyback. Those are some of the buzzers in trade. Let's quickly look at the top gainers on the Nifty Midcap if I can before I move on. You have a Paytm, very interestingly. Paytm is up 6.5%. Likely a rub-off effect of Zomato, one of the reasons. Let me pull up also a Nykaa, up 5%. A Suzlon is up 5% for totally different reasons. PB Fintech is up 3.5%. So all of these fintech platform entities are doing fairly well today.
I'm surprised you didn't talk about Zomato. The reason why all of them are because
so that's talk of the day, Tamanna, and we'll get to that.
But that's because that is the outlier, isn't it? That is the outlier,
yes.
Which is completely defining or defying all the trends that we're seeing today. Zomato is a very, very interesting story, and we will have a more detailed conversation and an analysis ahead on the show, whether it's all hunky-dory for Zomato or if there's a different side of that story. Yeah. Any more stocks you want to add?
Yeah, I mean, within the auto pack in the mid-cap space, you have an Escorts, which is not doing so well. FMCG names, something like an Imami, not doing well at all, 5% lower. So let's pull up in the same breath even a Dabur declared numbers yesterday. Again, may not be absolutely languishing, but 2% lower on the back of a steady, or if I may say, strong set and the rural recovery play, 2% lower in trade today. So you've got plenty of spaces, sectors which are battered despite the outlook looking fairly good till, in fact, yesterday close. Tamanna.
Just a quick word on the numbers that are flashing on your screen. Hindustan Zinc has just come in and first cut over there. Net profit up about 19.5%. So that's just the first line we have. We'll get more details. I'm seeing a sudden spike in the stock as we speak and building rapidly. So H Zinc numbers are good on the face of it. Again, it's an outlier in terms of what is happening with the entire metal space. But let's get in our conversation started with Brijesh Singh, opulent investment advisor, who's joining us now on the show. Very good afternoon to you, Brijesh. Great to have you on. Just on the market mood. Now, very clearly, we're following global trends, but we have enough of our own factors, which is leading to this kind of a pain point. Just your levels first on the Nifty and the Bank Nifty.
Good afternoon, Tamanna. See, overall trend, till yesterday everything was fantastic. We had been talking about the higher level Nifty might cross 25,200 and followed by 25,500 and all this stuff. Now today we have seen a gap of opening. Now this gap of opening has been continuing still. There is no sign of any sort of recovery from where we can see the selling has been absorbed, and the morning low, which was made of 24,723, that low would be intact, and we might see another layer of upside. Nifty is on the hourly chart is still trading below the shorter term moving average, which has a value somewhere around 24,890, or I would be saying 24,910. So till this level, I would be using this level. Till this level doesn't cross on the higher side, any short, any long should be used to go. Should we go for the short, keeping that thing at the stop loss? Now, I feel that this level of morning panic low would be breaking, and Nifty support to watch would be 24,650 to 24,680 level. Anyhow, if that thing breaks, then the previous swing low, which was the previous level where from where the rally started upward, that was 24,400. That should be kept in mind. So downside, two support levels are there: 24,400. And immediate support, if I talk about 24,650 to 24,680. Now the only point here right now why Nifty is not going down is, if we look out the Bank Nifty, still it's not given any sign of negativity. Still it has been holding. If you look at the hourly chart now, in that hourly chart, still it has made the higher lows formation, trend line breakout has been there, no doubt. the bank index is trading below the longer term moving average, but the previous swing low of 51,180 around, it has not been broken. So till the time this level doesn't break, we don't think that Nifty would be breaking the downside level which we have talked about. So immediate support for bank Nifty has been considered, then 51,000, 51,100 would be coming. If any of that thing breaks, then the panic low to watch would be 50,600 mark to 50,700 mark. Whereas on the higher side has been considered, it is finding selling pressure at 51,800, 52,000. So I feel that bank Nifty should consolidate in the range of 51,000 to 52,000.
51,000 to 52,000 is the range on the bank Nifty. Frankly, the bank Nifty story is an HDFC Bank story. I have no two thoughts about it. Whatever you're seeing, or whatever kind of benefit you're seeing on the key index, is also because of HDFC Bank. Let's just pull up Nifty contributors for a second to see what's happening there. And HDFC Bank play is an interesting one because it's the day after the bank Nifty expiry. Our top contributor right now to the Nifty as well, followed by Kotak Mahindra Bank. Brijesh, before we get your view on Hindustan Zinc, Zomato, etc., let's just get your top picks today.
Okay, so there are two top picks. One is on the sell side, one is on the buy side. I'll start with the sell side. First stock to watch would be from FMG pack, that is Marico. On Marico, if we look at the hourly chart, stock has been trading below all the important moving averages, whether that be short term and medium term. It is trading below that. Trading near the day low also, 663 around the stock has been quoting. So any rise towards the level of 665 and above, one can take a sell side in it, keeping a stop loss 674, play for the target of 650. Time frame to hold the counter would be 1 to 2 days. Another call, which is on the buy side, the stock had formed, that is Chambal Fertilizer. The stock had formed the rounding bottom formation and it is eager to break on the higher side. So somewhere around 527 around, if a stock trade or below that level, one can take a buy call in it, keeping a stop loss of 580 and then play for the target of 548 to 550. Time frame to hold the counter for this would be 3 to 4 trading sessions.
This Hindustan Zinc numbers are just looking astonishing, and I know you're looking at the details. Hersh, we're going to get Agam up in a minute to talk a bit about it as well. But look at the spike in that stock. Your net profit is up 19.4% at 2,345 crore rupees. Revenues have jumped up 11.6% at 8,130 crores. Your EBITDA and your EBITDA margins are also good. Your EBITDA is up 17.9% and your EBITDA margin has gone up from 46 to 48.5% as well. So Hind Zinc, now slid down a bit after that initial rush up, but those numbers on the face of it look pretty good.
Yes, they look good, Tamanna, but two things that one would really need to be cautious about or keep in mind is the mineral tax changes. If that Supreme Court ruling were to go through or get implemented, the impact of that, at least just looking at the financials, nothing here on that. Maybe the fine print may have it, or maybe I've missed it. Either way, but that's something I would really keep my eye out on, and we'll try to pull out those details. I'm sure Agam will be looking at that as well. And outside of that, of course, the positive is that the EBITDA number has gotten better. This is of course off a slightly higher base, so it looks like a fairly good set from Hindustan Zinc right off the bat. Of course, some bit of cool off seen in the stock already. Let's also pull up a Vedanta because that one owns Hindustan Zinc. What's Vedanta doing in trade? Well, no action there.
Yeah.
So
let's see if Brijesh has a view on Hindustan Zinc on the charts. Brijesh, are you tracking this?
So if we look at the Hindustan Zinc, on the shorter term time frame, say 4-hourly chart, still it's been trading with lower tops and lower bottom formation, and the medium term moving average value comes at around 657 around. And if I'm not missing, stock when this thing result came, it made a high of 659. Again, it has cooled down. So the only thing is, if it crosses this level of say 657, then one can take a buy call in it with keeping a stop loss of 632 and play for the target of 677 to 680. Otherwise, we have to wait. I feel that that the level of 655 to 660 zone would be tough to cross Hindustan Zinc.
Agam is also joining us with a little more detail on what's worked for Hindustan Zinc. Yes, Agam.
Right, so we do know that the top line has seen a near 12% growth on a year-on-year basis on account of volumes which have come through the course of the quarter. A lot of that is on account of zinc volumes, but let's not forget, even in terms of their performance with respect to silver, it's been fairly substantial, and that has actually led to your top line growth of around 11.6% to be precise. We've seen a considerable expansion in your operating margins. In fact, 250 basis points to be precise, coming at around 46.5%, and consequently your profit has grown as much as 19% on a year-on-year basis. A couple of reasons here behind the expansion in your operating margins. One is that you're actually looking at a temperance when it comes to fuel costs. Secondly, even in terms of your increase in employee costs, that hasn't been as substantial. So on an operational basis, these are some of your variables which are actually playing in favor of margins. Also, it has to do to a certain extent with respect to pricing of their zinc products, because if you actually look at the segment returns for zinc, they've seen a good amount of growth in comparison to the consolidated picture. And let's not forget, silver has also come through when it comes to that contributing to that expansion in overall operating premiums. That's possibly also the reason why we are looking at that expansion in your EBITDA margins and that consequent impact as far as the bottom line for Hindustan Zinc is concerned.
All right. Thank you for that, Agam. Thanks for those insights. Of course, both zinc as well as silver leading the charge with regard to where Hindustan Zinc's numbers are. Let's move on though. Stock of the day, Zomato surely spikes to an all-time high following very strong first quarter numbers as well as commentary. And it's also given a sort of bullish sentiment for brokerages. Most brokerages have upped their target price on Zomato. However, there are risks investors should be mindful about, including the risk of valuation or overvaluation. Now, to try and dive deeper into this, try and get a clear picture of what Zomato's prospects are, why it's gone up, and what could the potential risks be. We have both Mahima and Varsha joining us to break that down.
Right, Hersh. So, I'll take up the bull case for Zomato. Zomato has zoomed in trade today, and a couple of reasons. Firstly, it came out with its Q1 earnings where revenue was up 18%. EBITDA has significantly improved from that 86 crores to 177 crores. Net profit has grown 45% and margins have doubled from 2.4 to 4.2. Overall, if we see segment-wise performance also, quick commerce has grown 22% QOQ. However, if we see the YOY performance, it's grown 2.5 times. And even if we see the food delivery business has grown around 12% QOQ, however 45% overall YOY. And if we check the monthly transaction user for food delivery, it's grown around 16%. Gross order value has grown around 10%. And if we see the gross order value growth, first we'll go to the segment-wise performance for monthly transaction user for quick commerce, that is Blinkit, it's grown more than 100%, and the gross order value around 4%. And overall also, if you see, in terms of what is playing well for Zomato, it's the Blinkit play that is working. The contribution to revenue from food delivery is around 46%, but Blinkit is now 23% of total revenues, which has grown from 15% in just 1 year. So, this is the major reason why Zomato has turned overall profitable and has seen such a good growth. But Varsha, there's also Swiggy coming in with intense competition. What do you have to say?
Yes, Mahima. So what all you said is actually appreciated, but one needs to think that Swiggy is coming with its IPO. The issue size is around 10,000 crore, and Swiggy is giving good competition when it comes to food delivery and quick commerce to Zomato as well. Even we have Zepto on the table, which is actually giving good competition. And if one has to see the numbers what Swiggy has posted, so revenue from food delivery and quick commerce has increased almost 35% in FY24, while if you see operating losses dipped from 2,500 crore to rupees 1,500 crore. And also according to some reports, for example, Macquarie sees increased competition for Zomato. Now this is on the back of JioMart coming with food grocery delivery, which is they're going to plan to offer in 30 minutes. So this is one of the risks that Zomato have. And now back to you.
Right. So while there is some kind of competitive intensity when it comes to Swiggy coming out with IPO, but I think when it comes to the quick commerce space, Blinkit has an upper edge because of the kind of guidance that the management has said. They're increasing the dark stores. They've guided that they'll increase the dark stores to 2,000 from the current 663 mark. And overall also, the kind of speed with which Blinkit delivers right now is much faster than what Instamart and JioMart is doing right now, and the kind of expansion that Blinkit has right now in terms of dark stores is much higher than these platforms specifically. So first thing, that, and management has also guided that they are expecting 20% growth in the near term in the food delivery business as well. Plus, in the start of the show, Hersh also mentioned that brokerages are also bullish on the stock. If we see Citi is extremely bullish given a target price of around 270. It estimates FY24 to 27 estimates food delivery growth, GOV growth, that is the gross order value growth, at around 20%, and that gross order value growth is estimated at 50% plus CAGR for the quick commerce. Moving on, they've also said that they expect consolidated adjusted EBITDA to grow at 55% of CAGR, which is quite a significant number to grow at. Moving on, we also have a couple of brokerage notes which are again bullish on Zomato. Nuvama has valued the food delivery at $14 billion, and quick commerce, that is Blinkit, is not far away. They valued it at around $13 billion. We also have CLSA, which has raised its earnings estimates by 6 to 36% for FY25 and 27 estimates. And CLSA is one of the brokerages which is extremely bullish with a target price of 350, which is almost a 47% upside from its yesterday's closing. And they've said that the target is an equal weight blend of both DC and the FY26 PE. And overall, if you also see, Axis Capital is also bullish. They've given a target price of 287, and they've raised the FY25 to 27 estimates top line by 7 to 12%. So despite the kind of growth that Zomato has seen today, brokerages are still bullish. But Varsha, the valuations right now for Zomato do look expensive.
Yes, absolutely. So if you see from valuation perspective, if I even consider price to sales, at current valuation, at current multiple, it is trading at 18x. Even if I have to consider FY26 numbers, we are actually giving 8x of basis FY26 numbers. Now, I was just one of the hedge fund managers also mentioned, that it will take 230 years to recover your money basis, FY24 numbers that Zomato will be posting on an annualized basis. And considering price to sales, it will almost take 15 years to recover your money. Now, if you see, also one of the things that I think that is a bear case when it comes to Zomato, that the growth Zomato has beyond tier 2, tier 3 city is like, there's no growth beyond tier 2 cities, because I think at some point of time the growth for Zomato will be finite. I don't think so that Zomato will have 2x or 3x fold after it will achieve a certain market share.
Right. So just to conclude, while the stock has literally zoomed in trade today, valuations do look expensive for the stock, Tamanna, as of now.
So I think between the two of you, I don't know who won, but definitely Mahima seems more convinced with the bull case than Varsha does with the bear case. Not completely. Yeah, valuations are high, but then that's the story for everyone, isn't it, Hersh? I mean, if you throw a stone, you will hit several companies whose valuations are astonishing right now.
No, you're right, Tamanna, but just to contextualize this, annualized current, Q1 PAT is around 250 crore. If I just annualize that, which isn't the best metric to look at Zomato. But if I were to annualize it, that would be 1,000 crore. It's trading at 2.3 lakh crore in terms of valuations, which is 230 times. So that's one. Second is it operates on a very thin margin.
Yeah.
It's a service-based entity which operates on a very thin margin. So the argument will always be that product will have to be purchased and thereafter onward sold, and the margins will always be questionable because
look at that one Blinkit figure which Mahima put out. Your order numbers have grown 100%. Quarter on quarter for Blinkit, but your GOV, your gross order value, has grown only 4%.
Correct.
So more people are ordering, but they're ordering very, very small ticket items with very little margin. So you're going to have more people using your product, but are you going to make more money off it or profit off it is the question.
Yeah, so to that, and to contextualize this, so whenever a new user gets onboarded on a platform, generally his sales will not be value accretive to the organization, and therefore holding up order value despite 100% new users, maybe off a low base, may not be the best way to look at it. I mean, I'm not sure if I'm making my argument
simply
clearly.
Batao.
So say you have 100 users, they double up to 200. The incremental 100 users will only be testing your platform.
So exactly
so
what
their
I
order
said.
value will not be massive.
So exactly what I said. More people are ordering, but they're ordering very small ticket items.
Yes.
And you're still spending the same money. You can't charge them a higher delivery charge, right? Whether I order one toothpaste or whether I order a whole bucket of things. Anyway, Sudeep Bandyopadhyay is joining us in, and let's see if he wants to get in on this debate. Sudeep Bandyopadhyay of ND Trade Capital with us. Very good afternoon to you, Sudeep. Tough day for the markets, but we're talking about Zomato, which seems to be on its own trajectory today. Your take on some of the points we've been debating here in the newsroom?
Well, Tamanna, very interesting points which we have been debating. I just put one little different version of this debate. I think we are looking at Zomato's today's numbers and trying to extrapolate how many times sales and how many times what P multiple and all that by putting figures. But I think what we are all banking on is, the massive growth which is possible for Zomato. And I think that growth is predominantly coming through Blinkit. Yes, Blinkit, as you were rightly arguing, that the new orders are not of similar value as the older orders and all that. So if the number of orders goes up by 100%, the GOV has gone up by only 4%. Absolutely right. But the point, the way I look at it, I think this business is growing at a scorching pace. And I think this growth is going to continue in the foreseeable future. It's just sheer convenience. And I agree with the argument that beyond tier 2, tier 3, there may not be life for these services to a great extent as things stand today. But I think we are progressing, country is progressing, and we are getting more and more industrialized, and people are moving to cities and all that is happening. So at least for the next foreseeable 5-10 years, there will be huge amount of growth which a Zomato or a Swiggy or the others will clock. Now, under these circumstances, we can of course argue that whether Swiggy will get an upper hand, whether Zomato will get an upper hand, whether Big Basket, which has got a service, they will gain momentum, whether Jio Mart will gain momentum. These competitive intensity will be there, but that this segment will witness scorching growth, that is undoubtedly true. So I won't extrapolate that kind of valuation with the current figures. I will look at the growth and the rate at which this business is growing and try and ascribe a value to it. Right. So I'm positive on Zomato as things stand today. Well, I may not be subscribing to a 350 rupee valuation as somebody was mentioning earlier today. But yes, at this stage, Zomato looks good.
Okay, CLSA 350 rupees is the target price which they've given. Brijesh, let me come straight to you. With regard to charts, would you wager a trade?
So see, already from a level of 146 around, stocks had moved up, to the level of 278. I was just looking, with the higher tops and higher bottom formation. presently, since from morning gap opening has been there and still it has been hovering around the intraday high. Now presently 230-35 zone is a nice support level, that is one point. But buying at the current rate, I would be avoiding because risk reward ratio doesn't favors me. So if it trades somewhere around 250 and below, then one can take a buy call with keeping a stop loss of 230 and then play for the target of 285 to 290. This I am looking for a short-term time frame. So if someone has a view of say 2 weeks, 2 or 3 weeks. 350 on the chart, I don't feel so right now.
Okay, thank you so much. We're going to slip into a very short break. Stay tuned. We'll take, of course, we'll analyze some more stocks on the other side of this break. We'll look at the auto sector and we'll quiz our guests on the same. So stay tuned.
All right, welcome back. You're watching India Market Close. No, the picture hasn't gotten much better. And worst hit, I would say, among all of it is the auto pack. Let's pull up the Nifty Auto and just show you what's been happening there. Very, very rough day, about 3% down now. And a whole host of reasons for this. Gurmeet Chadda, Managing Partner and CIO of Complete Circles, joining us to speak on, what is happening in the space. Very good afternoon to you, Gurmeet. How the tides have turned in just a matter of the same week for the auto companies. Post Maruti numbers, there was a lot of enthusiasm for all of these companies on a Zoom, and you're seeing the absolute reversal today. Do you think that the July sales merits this kind of concern? Of course, broader factors included as well.
No, absolutely. I think if you see the run-up, Tamanna Nifty Auto Index in last 5 years is almost up 3x. It's almost 280 to 90%. And if you see, for example, our two-wheeler numbers, for example, we are clocking about 1.3 crore kind of two-wheelers. This is roughly the same number which was there pre-COVID. In fact, it's slightly lower. I think it's shade lower than 1.3. It's closer to 1.2. Even in the four-wheeler segment, I think, look at the way Tamo, M&M, even Maruti after consolidating has run up. So I think it's some bit of a valuation check in my view, and as you rightly said, other macro and global factors weighing down on stocks, which have run up a little more. Also, typically, although it is not very related and established, typically a large IPO in one pocket typically might lead to some profit breaking in other players as well.
Are you putting this down to the Ola IPO, which was open today?
No, I'm not linking it. I'm just saying typically the timing part of it, right? You also have a Hyundai IPO, pretty soon this year. So, there could be some bit of the allocation which can always happen. But as I said, I'm not linking the two. I'm just saying there is some bit of valuation check, some bit of global news, and some bit of numbers telling you. Also, now you have a bit of a lean season before, the festive season really comes in. So there's maybe some bit of profit booking because of that as well.
All right. I'm just trying to understand from you, Gurmeet, from an auto perspective, if I were to look at a 2 to 3 year perspective for auto, we've seen a significant run up over the last year or so in the Nifty auto. Do you believe valuations are fair? Do you believe that rural turning around could possibly aid one specific set of stocks, say a Maruti, say two-wheelers, versus another? What should one look at the moment?
See, I think long term, I don't see there's any issue. If you see 90s, India and China almost sold the same number of cars. Today, China sells maybe 3 times, 4 times more. And as, the per capita GDP picks up over the next 5-6 years, I think, they say that apna ghar, apni car is the 2 biggest goals every Indian middle class household has. So I don't see that as a reason. Obviously, the trends are changing. So, if you see, it was sedan, and that's when Maruti used to rule. Now, almost 7.5 out of 10 cars sold are SUVs and MUVs. And that's why if you see M&M's numbers, M&M is actually now on the SUV in terms of volume. They have almost 21-22% market share, back to back 5 successful launches. Even in Tata Motors, I think if you see the RR number, the JLR numbers, especially the Range Rover variants bookings they have, they're clearly pointing out to that. And obviously the premiumization playing out. So I don't see any challenge as far as the long-term outlook is concerned. But near-term, because of the sharp run-up in a lot of these names, I think there is some valuation discomfort. Also, the auto ancillary value chain, I think that's where probably you'll see more opportunities than the frontline OEM manufacturers. We have had Ukraine going into war, so your traditional IC engine part, auto ancillaries, has seen huge disruption. A lot of companies are running at, they're at a very sweet spot as far as operating leverage is concerned, whether those are companies in tooling, fabrications, forgings, across the value chain. So I think auto ancillary is something I am a little more constructive on. So we are constructive both on the convenience portfolio, which is your switches, horns, lightings, etc., where you have a lot of operating leverage. Then you have the value-added portfolio, which is infotainment systems, touch screens, the software electronics parts, and the car electronic part, which is gaining more traction. And then you have the software side of the car, which is where the likes of KPITs of the world, play. So pretty more constructive there. But in the near term, yes, I think two-wheeler companies and tractor makers may get some bit of traction as rural recovery plays out.
Just last point, what would be your favorites in this space? OEMs, two-wheelers and auto anchs, if you had to pick one or two?
So auto anchs obviously at number one. We have Uno Minda, we have Sona BLW, Sandhar Technology, which is obviously the market leader in locks and smart locks, as well as they make frames for some of the leading bike sellers like the TVS Raider. So that's part of our portfolio, and we have KPIT, which I call an auto tech, or not. And then we have the four-wheeler names, and between four-wheelers and two-wheelers, it's more about allocating where we find more valuation comfort. So we have M&M. We have TVS, and we have Tata Motors in the portfolio.
Okay, so those are some of the auto companies to keep an eye out on, but a rough day on the street for Autopack, undoubtedly. Thank you, Gurmeet, for speaking with us. Now, we're also looking at another player coming in. Ola Electric's IPO is open for subscription from today, and the retail portion has been fully subscribed on day one. Tushar joins us with the latest update. Yes, Tushar?
Thank you, Tamanna. So, overall, the Ola Electric IPO is now subscribed about 30%. The retail subscription is about 1.36 times. Employees have picked up about 4.36 times the shares that were allotted to them. There's negligible change in terms of the NIIs and the QIBs picking up stock at this point of time. Ideally, they come in towards the later half of the IPO. Remember, the IPO was open till the 6th of August because of the weekend in between. So we may see in the NIIs and QIBs picking up stock about on Monday or Tuesday. Now, what is more relevant at this point of time is the anchor book of the company. So yesterday, about mutual funds picked up about 40% of the anchor book. Overall, anchor investors picked up about 2,763 crore worth of shares. That is about 36.35 crore shares have already been picked up by the anchor investors at 76 rupees per share. That's the upper end of the price band. Mutual funds, again, 40% of the anchor book. 2,763 crores already raised. Remember, the full size of the IPO is about 6,140 crore rupees. That the valuation is at about $4 billion. A total of about 80 or 82 crore shares are on offer in this IPO. So how the response, if the response from the anchor investors actually sustains, we are looking at a pretty decent subscription number for Ola at the end of the IPO. Tamanna.
Okay, so day one has been decent. The retail portion fully subscribed. That's the word on Ola IPO. Sudeep, not sure if you have a view here.
Well, I think they are definitely the leading the EV two-wheeler manufacturer in the country at this stage. But this is a very, very fluid space. There are too many things happening at this stage. Ola also has a large plans. Their plan of producing their own batteries, I think, is very interesting, and that should give them some comfort going forward. But at this stage, it's very difficult to comment on the future of this entire space. So from an aggressive investor's point of view, yes, it is worthwhile, taking a bet in this. But if you are conservative, I would recommend you wait and watch.
Okay, that's the story on the Ola IPO. But meanwhile, let's look at what's happening in the markets. Is there an improvement? Not really, I would say. It's still looking like a tough call for the markets. I mean, what is next week's play and what is next week's strategy? Let me come to Brijesh Singh on this. Brijesh, I'm not sure if you do an STBT call or what you would do at this point, but how would you set the stage for next week?
Still trend look bearish. When the show started, that time Nifty made a low was 24,723 that had been broken. It made a low now of 24,685. It is in the process, and 15-minute chart is in the process of making a hammered sort of formation, and we all know whenever the hammer is formed, it is known as the reversal. But if you look at the longer term time frame, or just say hourly chart or say 4 hour chart, still the trend is not that much promising. So if someone wants to go short for a STBT sort of thing, they can do it. Maruti looks still weak, at 12,732. If someone wants to play, then present rate can be used to go short with a stop loss of 12,900. Play for the target of 12,550 to 12,600 odd level.
Yeah. All right, we'll take a very short break. We'll come right back. Interesting call on Maruti Suzuki, considering that it's seeing quite a tough day. Cummins is the other stock that we need to talk about, down about 8% right now. More details on all that and more when we return.
Welcome back. You're watching India Market Close here on NDTV Profit. We have Brijesh and Sudeep with us. Sudeep, let me come straight to you. So Brijesh gave his piece with regard to what he expects next week. There's plenty happening on the global front, including global macros. What's your expectation, anticipation going into next week, going into August as well? What can one expect from markets? How are you looking at markets overall, top down, just in terms of valuations as well as with the global macro setup?
Well, Asha, I'm positive on the market, and I believe that the positive momentum in Indian capital markets will continue. There are a couple of factors. One is, of course, the sheer liquidity. I think the domestic investors are bringing in 22,000 crore per month via SIP, and another 25,000 crore is coming through other route into the market from domestic investor. So we have a kitty of about 50,000-60,000 crore incremental coming into Indian markets every month. Now, on top of that, I think US Fed indicating clearly that rates will start coming down from September definitely will encourage the FIIs to also start looking at India. They haven't been, in fact, they haven't really invested much in India yet in this calendar year. So that also should happen. Now, the joker in the pack, of course, is the geopolitical situation. Now, if that really worsens and there is some major flare-up in the Gulf or in West Asia, I think that will lead to some challenges in the market for some time. But again, I believe that if that happens, that will be a great opportunity for picking up shares, taking the opportunity of the dip. Because I think fundamentally, Indian markets are in a very, very positive zone. And this momentum should continue in the foreseeable future. So yes, there will be ups and downs, challenges here and there, but trajectory will be upward.
Okay, trajectory upward, still bullish. One of them, Sudeep, is HDFC Bank. What do you make of the move? Last couple of days has been doing very, very well. 2% yesterday on a tough day of trade, 1.5% today as well.
I actually sometimes wonder why it was not going up earlier. I think there are all the ingredients. Such I look at it this way. Now, if you have seen this, of course, you have seen the results of banks. The banks which were doing very well, their asset quality improvement is not there, because I think they have reached a level where the asset quality improvement is at saturation. Further improvement is unlikely. And the banks which had asset quality challenges, PNB, Bandhan, their asset quality has started improving. So I think the story is asset quality improvement, a possibility is not there. So what is going to happen in future is the loan growth, and the backbone for that is going to be the CASA, the deposit mobilization capability of a bank. Now, which banks can mobilize deposits cost-effective way? I think that these are the banks which have got large network and a well-entrenched branch banking system. So an HDFC Bank, an ICICI, SBI definitely will have an advantage in the coming days, where cost-effective deposit mobilization will be the key for success and maintaining NIM or growing NIM. Now, under the circumstances, HDFC definitely is well positioned. They had their challenges post-merger with HDFC, but I think they are moving away from that and consolidating and becoming better and bigger.
Okay, Sudeep, thanks for that. Sticking with banks, State Bank of India expected to declare its numbers at probably tomorrow, somewhere in the afternoon. And net interest income expected to be up just about 7% on a year-on-year basis, flat sequentially, likely some margin pressure, contraction expected. Operating profit, again, just about 1% higher on a year-on-year basis. Provisions also on a lower base will go higher. It was at roughly 1,610 crore, 1,610 crore at the end of Q4 FY24. That's a very, very low number for the kind of size that SBI has. Unrealistic to expect that. But likely something around the 3,000 crore mark is where provisions are expected at. Profit after tax expected to be up 9% year on year. So that high base of 20,000 crore plus in Q4 likely won't be matched. Asset quality expected to remain flat, but you will look out for those pieces of information on unsecured that SBI seems to be seeing on ground, because SBI does have that kind of reach that no other bank has, which will give us a broader assessment on what's happening on ground. Also, corporate capex and growth there. how significantly is growth going to pick up, what the expectations are, will be the other focus area. In terms of growth, just above 1% on a sequential basis, loan growth expected, which translates to roughly 16% YOY growth, and deposits just below 1% growth. So roughly 49.5 lakh crore of deposits. Everyone watching out for that crucial 50 lakh crore mark where SBI is concerned. That's around a 9% year-on-year growth. But I wouldn't be too bothered about that because they showed strong growth in Q4 FY24. So sequentially, the numbers may be slightly soft. But otherwise, SBI expected to deliver another solid quarter overall. Sudeep, I'll stick with you. Just with regard to SBI, this has been a rank outperformer in terms of the way stock price has moved as well as profits have moved. Do you believe that, are you constructive on SBI even at these valuations? What should one do?
No, absolutely. As I was just mentioning, I think they will be very well positioned in the new environment where deposit mobilization will be the key to success. And SBI, as we all know, with the kind of branch network they have, they are very, very well positioned. So SBI definitely remains one of the favorite banking stock as far as we are concerned. We are also positive on its subsidiaries, which does in a way contribute to its overall growth momentum. And at some stage, some disinvestment from some of the subsidiaries will help it to improve its capital adequacy as well.
Okay, Sudeep. Brijesh, if I can come to you on charts with regard to SBI specifically. Are you liking this one on charts? The run-up has been steep, but we've seen a bit of a cool-off, 5% down now from those highs.
Say, daily chart as well as the shorter-term time frame chart, whether we look, 1 hour or 4 hourly chart, still, the trend which looks little bit on the bearish side. Now, shorter-term moving average as well as medium-term moving average, the stock has been trading below that. That is one part. Second, if we draw a trend line taking up, previous swing low, it has been trading below that. That is also a negative part. Stock has been trading with lower tops formation. Again, that is a negative part. Now 848 around the stock has been quoting. So stock has to trade above 880 to overcome all these three factors. Otherwise, I feel that the stock might try to touch, SBI might to touch 820 and 780 level on the downside. So for a short term bet has been considered. These are the two level to watch on the downside, 820 followed by 780 to overcome what I have said on the chart front. Stock has to trade above 880 or level.
Okay, and Brijesh, very aware that we have a weekend in front of us, but just from a BTST, STBT perspective, any views, thoughts, suggestions?
Yeah, so as I have told, one stock was Maruti. There are two more stocks for STBT purely on looking the indices, what Nifty has been trading and what the other stocks they have given up. One is AB Capital. Stock has been trading below all the important moving averages, right? 211 the stock has been trading. So one can keep a stop loss of 280, go for a sell side, play for the target of 200, 202. Another counter to watch would be Hindalco. A similar pattern of what, as I have told about the SBI, has been trading with lower tops and lower bottom formation. Important moving averages has been broken. Stock has been trading below that. 647 around the stock is trading, so one can keep a stop loss of 660 and play for the downside level of 630 to 632.
Okay, Sudeep, I'm not sure if you track this one in particular, but Newland Laboratories is flying away in trade. It's up, if we can pull that one up, it's up 15+% in trade. There you go, 17.5% now. Margins getting better. Sudeep, quick views. We have just about 30 seconds, if any, on Newland Labs.
Well, I don't have any specific view on Newland, but overall pharma, I'm extremely positive on domestic pharma business, and that's where they about 25% CAGR. So companies like Mankind, which has 95% of business in India, definitely remains favorite. And anybody having a significant business, domestic business, will do well in the near future.
Thank you so much, Brijesh. Thank you so much, Sudeep, for speaking with us today. Just a couple of minutes to go for markets to close on what has been a rough day on the street. And it's really shown the way markets have responded. I mean, remember, this is a global story. This is a global story that we're seeing very, very important data coming out tonight, India time, from the US. Keep that in mind. Non-farm payroll data, essentially jobs data and unemployment data in the US for the previous month, for the month of July, is going to come in. If it is negative, you could see this worsen. So keep that in mind. Remember, two major companies have come out with disappointing numbers post-market hours. In the US, you'll see that impact as well. I'm talking about Intel and Amazon. Intel is sacking 15,000 people. Now, having said that, what's that doing to our markets? 1% down on the Nifty. The pain continues. We started the day weak. We're ending the day weak. In fact, some of that pain point deepening as we get into close. The Bank Nifty, which was looking like the outliers, also joined the negative party, unfortunately, down about 0.5% on the Bank Nifty. And really, if you pull up the heat map, you're really seeing why and what has pulled the markets down. One, HDFC Bank really cannot do much beyond a point, trying to pull up the markets, but there it is. Divi is doing okay, but it is the auto and metals which are really hurting. Look at an Eicher down 5.5%. Those Royal Enfield numbers for the previous month have not helped at all. Maruti also has seen a dip in sales and exports for the month of July. Same with Tata Motors also has not seen the greatest numbers, and even the results, though in line, the commentary was not something that the street took too much heart from. JSW, Hindalco, Tata Steel, all of them hurting for a couple of reasons. One, I talked earlier in the show about the recession fears and how that will hit demand, but this royalty tax on minerals, which is an ongoing case in the Supreme Court. Actually, the Supreme Court has upheld what the High Court said, so it's not even ongoing. They're hoping for a reprieve. Could be a very big hit. We were speaking with one analyst today who said only in Odisha that the royalty bill for the industry could be 2 lakh crore rupees. So maybe that's why you're seeing metals hurting. But if I were to look at the broader market, and let's pull up the advanced decline ratio, there's pain everywhere. Hersh, why don't you come in as well? There's pain everywhere, and I really don't see it improving too much. I mean, you're seeing that little green worm slightly above, but if you ask anyone who's looking at their portfolios today, they're really wondering what's happened. Let's just pull up sectoral indices for a second before we get to broader markets specifically. And reality is the big loser. Auto, metals, we talked about. IT also. Just mildly in the green, I would say, is pharma, that too Divi's and Sun Pharma, that have held that whole story up. Everything else looking poised for pain.
Yeah, PSU Bank as well, and IT down 2.5 is painful to watch. Of course, global macro is not helping IT, but why the rest, right? I mean, 3% down on auto, 2.5 plus on metal because of the overhang there. You just spoke about almost 4% on realty as well. So pain is real, especially in some of those broader market names. Let's pull out the BSE 500, try and talk about some specific names as well. Of course, a lot of them buzzing on the back of numbers. PCBL is the one that comes straight to me because yesterday it was one of the top gainers on the BSE 500, one of the top 10 gainers on the BSE 500, continues to be so, second consecutive day. Zomato ruled the roost, of course.
I just want to add, I was seeing a piece, Zomato, yes. Apparently, Dipinder Goyal has made upwards of 1,600 crores today because of the run-up for Zomato. So maybe the district launch has helped him. But yeah, I mean, he'll be ordering the most expensive stuff on Zomato today, if nothing else. 1,600 crore rupees is what DP has apparently made. Yeah, but carry on.
Yeah, and we try to break that down by giving you a bull versus bear and trying to understand what the risks could possibly be of the valuations that have run up 6x almost. From those lows. Let's pull up the BSE 500 again, talk about a few names while we are at it. You also had Suzlon Energy again locked in upper circuit, but Paytm piggybacking on the Zomato run, as well as, of course, having transactions with Zomato as well. So maybe that kept Paytm at play. But not often do you see 2-3 nifty names here in the BSE 500 top losers list. Aisha as well as Maruti make it there today at least. You also have an Imami which is trailing in trade. Birlasoft, third consecutive day in the red and sharply in the red, 6% down today. And Cummins India, Cummins International not having the best commentary coming in. and Cummins India facing some bit of that wrath.
Yeah, so that's the picture. Just before we wrap, I want to put up on the screen something that Nilesh Shah has tweeted out of Kotak, and it's just giving you a sense of where we are. So listen to what he's saying. He's saying broad-based bull market has pushed valuations in some part of the market. He goes on to say in BSE 500 pre-COVID, 93 stocks traded above the 50 PE trailing part of the market. Now it's up to 2.5 times to 228 stocks. I mean, the valuation concern is a very, very real one. Look at that. The 12-month trailing PE ratio in the BSE 100 and the number of stocks right now, which are in the 50 to 75 range in 2020 compared to 2024. So you have a painful piece, and you know, in the piece we did on Zomato today, 230 years. You need 230 years to make the profits which are baked into the stock today. So yeah, I mean, on Monday, if it's a great day, we won't be having this valuations discussion. So
Tamanna,
keep that
that's
in
not
mind.
trailing 12 months. Just to quickly clarify, 230 times is the annualized PAT basis Q1 numbers.
Yeah, what Nilesh is putting out is trailing 12 months, absolutely. But you know, that's all the time we have on the show this afternoon. So from Hersh, me and the entire team, thank you so much for joining us. But stay tuned, a lot more coming up on the other side on NDTV Profit.